Everybody, morning. Happy Friday on a Monday, and Monday on a Friday. Friday, I mean, wait, it's just Monday. Happy Monday. Welcome, everybody. Ah, welcome. So we got Don, Rob, Craig, Hugh, Arturo, Scott, Kevin, Serge, Cliff, Mark, General Rush. Good to see you, sir. Diane, David, Nancy, Gary, Frank, B, Ted, Darren. Welcome, everybody. Rob Gayton. And, yeah, I guess we'll see how this week pans out. We've got I mean, Fed cut rates at essentially the all-time high of everything. Lots of S&P 500 stocks, Nasdaq stocks, Russell stocks not at all-time highs. Russell not quite at all-time highs. But what does that do? I mean, Bitcoin right up there, banging at the all-time high. Gold banging at the all-time high. And then we cut rates because, in Powell's words, maybe sort of we were expecting the labor to be weak, but the numbers have been all made up and now we're correcting them. And I mean, this is just kind of like a comedy show, right? Like the numbers are all made up. Nothing means anything. I mean, I didn't even know what to say. So welcome to the show. You know, people just want Bitcoin, right? I mean, I posted a meme in Discord. It's like, just give me, like, what do you need? Just a Bitcoin, right? I'll be fine. I mean, maybe a gold bar, right? That's all we really need, because the dollar becoming trash. I mean, seems like everybody's a genius investor these days. Gold up 35% this year, Bitcoin up over 17% this year, stocks up over 14% this year. Everything basically sitting at all-time highs. I mean, the big brains, the smart people, kind of call it the everything bubble. If you've never heard me call it that, it's been here for a while. And just when you thought things wouldn't get any crazier, the Federal Reserve in its infinite wisdom poured a little more gasoline on this nitroglycerin fueled fire with a quarter-point cut. And that's what we really needed. Everything's stretched to the max. How high are we going to go? I mean, we just set a 60-year record on some stuff, and we're going higher for longer without a major pullback. We're about to get a reckoning. This might be the end of the trend for a while. I mean, you might ask yourself, why is all this happening? Well, it's simple. There's a growing sense that money is losing value. So the Bitcoin goes up, gold goes up, other things go up. People are looking at their savings account earning maybe 2.9, maybe 3, maybe 3.1%, and thinking I should probably just buy something, anything, before this cash turns into, worthless. Turns into breadcrumbs. Anyway, the government, with its run it hot policy on tariffs, tax cuts, and now rate cuts, is basically screaming, spend. Everybody spend. Spend, spend, spend. Spend, spend, spend. It's not like Jim Cramer, buy, buy, buy. It's spend, spend, spend. But here's where it gets interesting. While everybody's out there chasing the same handful of tech stocks, because there's only 11 stocks responsible for 59% of the gain since 2019, a quiet revolution has been happening overseas. Now, let me tell you a story about my friend. Let's call him Bob. Bob, smart guy. Buy what you know kind of investor. And for the last decade, worked out. Not bad. I mean, he's got it right a lot. He's all in on some U.S. stocks, and he's been feeling pretty smug about it. But lately, Bob's been scratching his head. He's been watching his U.S. small caps portfolio just squeak higher at about 8% this year, while his cousin, who invested in a bunch of weird international stocks, suddenly doing a lot better. Bob's not alone. While U.S. small caps are limping along, small caps in China, they're up 51% this year. And over in Europe, 25% this year. Even in small caps in Japan, 25% this year. The US dollar's so called king is down 10% this year. That's a massive tailwind for international investments. It's like the rest of the world is having a party and the US is the designated driver. Well, how do you play this madness? Well, one of the smartest plays, authored by a guy that we talk about, Michael Hartnett at Bank of America. His strategy, called the barbell. See, on one side you have the bubble, the US bubble, the everything bubble. And on the other side of the barbell, I mean, well, you have to think of it like dumpster diving for diamonds. That's what you got to do. You got to think about like Brazil, trading at ridiculously cheap 9 times earnings. Even the United Kingdom, 13 times earnings. Even global energy stocks, 13 times earnings. These are quite unloved, kind of forgotten. The stocks that pretty much everybody's given up on. But in a world where everything's expensive, cheap is kind of a 4-letter word that maybe I like to hear. And there's the international escape hatch. We're seeing some really interesting things happening in Japan. I thought about making a couple of videos about it, but they're finally starting to care about where shareholders and corporate governance reforms are happening, how they're freeing up cash for buybacks. In Europe, they're cutting rates while we're just barely getting started. And then China, despite all the trade war drama and the consumer spending only being 33% of GDP compared to 70% in developed market, blah, 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 blah. There's room to grow. They're stimulating their own economy. You can be like, well, the numbers are all made up in China, but if their version of NVIDIA shoots up double what ours does, where's the opportunity? When you got the king of the biggest company in the world, it can't really double. But little competitors in international markets, they can double, triple, 10x, 20x, 30x. That's where you make money, right? Opportunity. It's not about buying and holding NVIDIA because it's the big one. You got to go where the opportunity is. Now, for bond type sensitive plays, think small cap real estate investment trusts and biotech. These sectors are they love and take advantage of falling interest rates. When the Fed signals 2 more rate cuts here in 2025, which is what they did, that's what they said, those kind of stocks could be in for a wild ride, potentially. So what did I tell the people? What did I tell Bob? Right? I told him to diversify his portfolio. Maybe not a whole Bitcoin. Maybe you want to buy part of Bitcoin, but then still use some of your money for fun, right? Because in this market, who knows what's worth more tomorrow? But seriously, everybody, I mean, this game potentially changed a little bit. The old rules don't really apply. I mean, it's time to think a little bit differently. Maybe look at some of the global stuff. We've got Korea making like exploding higher, that 3x leverage thing that shows up on the list almost every day. Maybe get a little bit weird with some of the investments, put a little money here, put a little money there. I'll dig into some specific plays in the coming weeks, but you got to be careful, all right? Substantial risk of loss and all that. So stay savvy, stay skeptical. For the love of all that's holy, be careful. You can lose all your money, all right? You can. So diving in, how do we make money today, right? We're traders. All trading involves a substantial risk of loss, and past performance is not really indicative of future results at all. Just because we did something in the past and we got it right and we made some money doesn't mean it'll ever work again. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade those things, you might lose money. If you desire personal financial advice, hire and consult a financial advisor. I don't play one on TV. I don't play one on YouTube. Don't ask me what to invest in. I'm never going to give you any kind of special side deals to invest in because they don't exist. All right. What you see is what you get. There's no backdoor deals, no secret messages offering you something else. That's just not anything I do. So today is a day. Morning, everybody. Hey, Joseph, Will, John, Jim. Got everybody coming in. Thanks, Pierre. So, ES, I guess over the night, over the weekend, riding the 15-minute. Just kind of hanging with my homies. This is a watermelon seed squeeze type play. Higher lows, lower highs. Came into it from the top. Doing this. Does that mean we come back out of it in the bottom? Usually it's like an A wave. Almost always these are some sort of B wave. But they don't fit the classic, absolutely beautiful correction narrative where we go down, retrace the 618, and then get continuation. So this C wave that pops out of this can be gnarly, for lack of a better term. So just be careful out there. You know, we drifted off like this. And we did another one. Look right here. So we kind of did one right here. That was probably the A. This probably the B. And then we did a little baby that didn't break below this over here. And then we shot higher in a three wave. 1, 2, 3. Topped out at the classic. And we actually scraped that bottom of that big bubble I've got up there. And dropping again. Now, everything with, notwithstanding, we've got this high, we've got this low. Turn off this one. If we break back up through this 618, odds are we're coming right up here. 67.36. Now the cash index is open. Down just a couple points. Pulling back. Not really. I mean, look at that. Look at that beautiful price action right there. We highlighted this last week. Closed above the 618. Shot up. Found resistance for a couple days. And then boom. Right to the 1618. Now we're pulling back. On this chart. So we've got a difference between the cash index and the futures. Usually the market just kind of churns a little bit until it brings both of those back into alignment. So be careful. As usual, nothing's clear. We're at elevated levels. We're not just going to go shooting off. This is going to be a tough slog probably. Let's go back and look at the analog. Just in case anybody needs a refresher on what happened here. COVID, right? This thing was rolling over. We were pushing highs right in the top here. We did this pullback. Funny enough, it happened in 3 waves. In case anybody forgets or had never thought of it like this. Top to the bottom. Took about 39 days. It was about 1,200 points. We shot back up. It's recovery. Right back up to it. We struggled to get through. Once we finally poked on through, took us about 200 days. Start pushing higher again. we've done this part a lot faster this time. Now, in case anybody doesn't remember, I'm going to jump over to a clean chart here. Doesn't remember what just happened in April. Here's the high, here's the low, 1,300 points, 47 days. That was almost the same size move as COVID. I mean, it was bigger, actually, point-wise. Took a slightly longer, like 8 days longer, calendar days. Same three-wave drop. This right here, 1, 2, 3. This was basically a COVID correction, but it didn't get all the press that COVID got because we didn't shut down the economy, but it did the same. Like, this is the same correction that happened in COVID. Now, we shot out of the bottom of this thing way faster. We didn't struggle right at the previous all-time high. Now we're struggling right up here. We kind of consolidated right up here. And then you look at this, and we are sitting at 168 days. And you might be like, well, how high could we go out of this? And that's where the craziest part comes from. To me, the craziest part. If you look at this, from this low to this high, just copy and paste it, drag it over here. We could be at 10,000 sometime out here, January 2027. So for the next year, we could be doing this, but it won't be without, like, it'll just be a grind, though. Little pullbacks and humps and bumps, but no real big moves. Like, gets to be kind of tough trading when the market doesn't really pull back. So that potential for an echo basically is on the chart. This pullback, that pullback, even though on log mode they don't look the same. When you take it off log mode, they're exactly the same. That pullback, this pullback. So we could either be in for a grind, or we could be topping out because there's a lot of confluence of resistance right here. Yeah, the extension of this move, we're actually running into it right here. Could result in a bigger pullback back down in this area very easily. So you guys, keep situational awareness here. I've drawn the potential supports lines. It's going to tell you we're rolling over. All right, we'll start on the lower time frames, which, they get broken all the time. But we'll start on like a 5-minute chart. We'll break through the roadmap line, which decided not to draw. I should reload this. Clear it out for a second here. Oh, that's cool. Picked up dark mode, huh? Come on. Come on. You can do it. Come on. Really stressing the server, apparently. Goes to 5-minute, then the 15-minute, which we were already there on the futures. Kind of hugging. Then we'll break the 30-minute, which would be a little lower. Then we'll break the 1 hour, which would be a little lower. 1 hour should be about right here. 4 hour, on down. The daily, on down. Then the 3-day. And then the weekly. And then the monthly all the way down here. Things could get crazy, but it'll have warning signs as what I'm saying. So NQ, tag the bubble, tag the top, like we potentially topping out here. Remove some of these fibs off here. We did this pullback from that high. This off of the, come on. There's the low. Shot right up here. The log move. Yeah, log move. Now, 27. Be the next point. Bounce off the weekly. Shot right up here. Weekly roadmap bounce. When we closed above here, we're 75% likely to hit the 1.1448. 70% likely to hit the 1.272. And we're 35% likely to shoot up here. So the probability drops way on off that we're going to make it all the way up there. But that's still 35% chance without coming all the way back down. Russell finally poking out. This one may be the one we're waiting on right here. 2600. It's the laggard. Once we bring all three of them into alignment, watch out. Watch out, watch out, watch out, watch out, watch out, watch out. Once they're all in alignment, that's when the big crunch can happen. And looking at oil. Here we go. This right here might flush down here. We get down here. Watch out for a hot war in the Middle East kicking up again. Missiles flying. Guns a-blazing. So be aware. That may, probably will happen. It's what happened last time we dipped. Remember? Everybody thinks it's like, oh, you know, all of a sudden we had some conflict in the Middle East. Yeah. Look what happened right when it started. Oil dipped into the 55 area. Like, well, they wouldn't do it again. What if it dips down in the 250 or even down in the 40s? They know how to get oil prices up. Don't be naive about it. Gold pushing even higher. Craziness. Yeah. No pullbacks. This will be a wild ride right here. When we do finally pull back, I've said silver was probably the big catch-up play of the year. We're just barely scratching the. We haven't even gotten to the breakout yet on silver. This will be the crazy thing. If this actually starts ripping here. Got this high. Got this low. If it catches up to gold, we're going to be up here like $120 an ounce. Just on the move. 40. It's a heck of a catch-up trade. Now, I've only been looking for like 60. But if we actually push it out like we've pushed out gold, that's what we could be looking at. And Bitcoin here, tie back down. Looks like we completed the 3 just shy of where I expected it to. Now here's the thing, I don't fully know. Like, was this the 3 or was that the 1 of the 3? And this is the 2 of the 3 in a big way. And that could have been. Gotta grab my number counter thing here. See, this could have been a 1, 2, 3, 4, 5 right there on a different degree. I have to put it on smaller degree. And now this is a 2, part of a bigger. It's probably down 2 because this would, you'd have to have another count in here to be that part. So The wave is all fractal in nature and self, self blah, blah, blah. So the level we got to watch is the bottom here to the top here. If that was 5 up, be like, whoa, that's a lot of lines. Which one do I watch? Let's just clean it up just a little bit. Clean it up a little bit. So we're watching right where we're sitting. Funny enough, we stopped right there on this drop. Coming down. Right there. So this was a 1. This is a 2. Now we've got to see this break back above this level right here. And it's probably game on for a bigger move. This is going to push this 3, 4, 5 way on up here. And like I said, this is going to drop down another degree. And this will be a 1, 2, 3, 4, 5 up for the 3. That'll probably push it way on up here. So we're setting up for this to be the final move, is what we're setting up. If this is going to get continuation. Let's see, click on that level, that level, that level. Yeah, this puts the next move. Running out of shapes and things to draw here. This puts the next move potentially right there. Just delete a few things here. Maybe I should draw them in a different, draw things in a different color here for us. So right now we're looking for this intermediate move we've got going on here. This pullback, got to go on here. Look for that bounce. Probably a correction. Final move. That would be the 3. We'll probably get another 4 back down in this vicinity. And then potentially 5 right up here. Now 3 could be a little bigger. We'll have to see. We'll have to see. This will be interesting. If it plays out, now the warning signs, the places where this breaks down, this all starts failing. Grab the bottom here, grab the top here. First warning sign is right here. If we get below 111, that's the first warning sign that Bitcoin is done, and this was the top over here. That was it. That was the highest high. Now, another reason I'm worried about that is because of this. Right there. So if we break below this level right here, crypto winner might be hitting, might be starting, may have gotten here just a little bit early for my estimate of early October. It's a bummer, but it's what we're looking at. Winter came a little early maybe. So that's what we're watching right now. That's the kind of stuff we gotta need to keep this level intact. We can poke through it in reverse. It's not like sell everything on a dip below it. Bitcoin loves to push the limits. We can see this spike down. We don't want to see it go lower than this low over here though. Go lower than that low. Trend is now down. Time to lighten up everything. Ethereum broke through. This is another reason that I'm concerned here. Ether broke through. Set up the drop back to the daily roadmap line. This Now, it did potentially complete a lower low than this low back here from August. We did make a lower low right there, but odds are we're going to get continuation down here around 3,500 at this point. One day can make the difference here. NKD grinding on that 1618. If we can shoot this thing on off higher, 48, 49.50 is my target area right up there. Dollar keeping the downtrend intact, even though we've seen a weak dollar. I'm kind of expecting this to break higher. Got this roadmap line at the 100. If we get back through it, probably back test, and then go shooting off. And the big upside potential here, we look at the giant pattern that we did, the move up, the retrace. This is just a giant measured bounce. People so stuck in the day-to-day in the narrative. We did a move up. We did this big giant ABC retrace into the 618. If this kicks off, maybe the narrative may change that the dollar's too strong and it's killing everybody. 125, 130. Everybody the target. Usually the dollar goes kind of exponential and then takes a long time to correct. It's kind of the, you see, exponential, long time to correct. Long time to correct. That one took a lot. That one took like 6-7 years, and then exponential move. Yeah, we could keep correcting, but we've now set up the potential to do another one of those exponential continuations. Apple. What's up, Apple Dumpling? Just sitting here. If we get this, like, so this will be a level to watch right here. If we can get this close above this level right here, if we can actually close above that 250 and change, we might be able to push this on up right there, 276. Finally pushing up through all this resistance. It's kind of the last little one to watch. We may just double top it, so be careful there. But it tips the odds we're going on up at that point. This price action very sloppy though. I don't know if I trust it. I've not been taking Apple long at all. Amazon proving that the gap fill is very difficult to get through. Support back down here. If we don't hold it, watch out deeper. They've got another pre-Black Friday sale coming up in October. End of the quarter for all these things coming up. Of course, blackout windows coming up. So this week into next week, we've got blackout windows ramping up, which means that the stocks themselves can't do any buybacks starting this week into next week, and up until they report earnings. There's no legally required blackout window. It's a voluntary process. Interesting shift in everything is that Trump pushing for the SEC to change the regulations to just semi-annual corporate reporting instead of quarterly. I don't know that that's a great idea or not a great idea, but so if Meta pushes on out, 840 is the target. That's right now. That's what we're looking at. If we can get through that prior high, if we turn down though, roadmap line supports and then deeper potential correction. Microsoft, same kind of pattern, but it's more advanced here. We've retested here. Coming up, we've got a resistance at this 618. We can get through it. Probably going to go up and tag that 1618. We came up just shy of it, actually. Stopped about 553. And this 1618 was up here at 565. So we came up about 15 points short, roughly. And if we stop right here at 530 area, that can take us on back down to test the breakout. You know, we made this high back here last summer. We broke through it here. We did a big A, B, C. A, absolutely beautiful. B, correction. C, we did that beautiful correction there and then shot higher. This outperformed nearly everything. Like I say, 62% or so off the lows. And now we're in this correction. NVIDIA also potentially in a similar correction here. We didn't go to the 1618. It still has that potential, but we've made a move down. We've actually retested the 618 right here and started having some trouble here. We could do this in the next few days, get down here, retest the breakout. That's from back in December, November, December, those highs. Set the breakout level. Come back, retest that. Then potentially run on up around that 212 to 220 area. Tesla. Salah. We have a resistance right up here around 450, 460. Get through that. We could just go cruising on up. We could just cruise on up to the target at 500. I've got targets on up here, 600. If things get frothy, we can see 800. That's just a 1618 extension. And 550 right there. It's 1448 of this pullback. We're like 75% likely to hit that 1448, but I try not to get too overly optimistic on things like this. High flyer. That's another 110 points up. That's like 25% gain from where we are. Just be careful out there. Netflix still churning in here, taking its sweet time to do the final moves of the correction. Still taking its sweet time. First move down, the retrace in 3 waves. Now we have a 1, 2, holding the 618, 3, 4, 5 potential. We really just, the only thing we really need to do is make a lower low lower than that A right there. Just poke below that 1146. But it looks like we could get a little deeper in here. Possibly 1100, maybe even down to 1000 if things get really saucy, spicy, extra crispy. All right, I go pull all the movers and the shakers. Things moving up $2 in the market. Put them on the gainers list. Things moving down in the pre-market. Put it on the decliners list. Check them out for potentials and ASML. Nice little pop there. On the way to the target. 1000 was the target, so we're almost there. I mean, we're scraping the bottom of the target. So what happens next? Well, we're going to find out. If we keep ripping, cruising on through, get up into this probably 1160 area. That'd be good. 1150, yeah, 1150, 11. This area right here, where this is drawn right here. If we turn down from there, highly likely we're gonna make a lower low. But we got to break through this level of support to confirm that's gonna happen. So if we turn down from here, it's the warning sign that we may go make a lower low than this low back here on Liberation Day. Now, if we can get on higher, this is where things get absolute crazy. Crazy town. So if this pushes on up, we actually make it to here, probably do a retrace back down in here. It may come up shy of this 1200. But then it will highly likely go shooting on out, maybe all the way to 1600. May do that. That'll be the difference between this being an ABC and this being a 1, 2, 3, This was the only move that was guaranteed. Hopefully somebody took it. I didn't have enough cash to play that move. FLGC. And nothing. This is just nasty, gnarly, dropping almost a dumpster fire pattern. The only thing really missing. Oh, nope, there it is. There's the reverse split. I was going to say, the only thing missing, reverse split. Nope, there it is. Absolute garbage. Garbage, garbage, garbage. I wouldn't touch that. MSTR. No, MTSR. Mess with me. I was like, wait a minute. Wait a minute. That one, look at that. Gave you no entry. Didn't confirm an entry. You said to buy on faith. Boom, right up to the target. MBX. Boom. Yeah, I wouldn't have touched that. GDXU. Approaching danger levels. This is going exponential. This thing reverse splits. But remember, it's not a company. It's an ETF. So ETFs can split and reverse split and whatever. Doesn't really mean anything. This is starting to get to the point where the third wave is probably done. Then we'll see a retrace back down in this vicinity, more than likely. Maybe even down to here. And then we go higher. ODP. Everybody's real quiet today, so. Yeah. I don't see an opportunity there. Pro. No opportunity there. Boxel. No opportunity there. That's a dumpster fire. First splits galore. Tempest AI. Now, this was probably going on out. 103, 116. TER. Potentially breaking out right there. Ooh. QQQ fired off a credit spread alert. Let's see. I was going to talk about, oh yeah, EWZ. Look at Brazil right here. Beautiful. Look at that sucker. So I talked to, in the opening monologue, I said, I talk about some of these opportunities. That fired off right there. And boom, that was the target. But it got extensions on up to 31. Now, looking at the bigger picture here. Move up, retrace, and kind of sketchy move up, retrace, move up, retrace. It has the bigger potential to go higher here. We haven't really recovered the highs we had from pre-COVID here. This has an opportunity to go from 30 back up to that 47, 50 area. Let's see, Gary. This one's been just crazy. If we actually break out on this deal right here, we could see this pushing higher very quickly. And Germany here, probably retracing back to the roadmap line. CoRU was on the list. EWZ, EWJ. Look at Japan. It's way over the ski tips at this point. I'd be very cautious chasing this one at this point. But if we retrace the breakouts, sets up this potential going from 75 up to 96. Not giant numbers, but these are emerging market type stuff. Even the EEM here, look at that move. going exponential. About to break out though. When you take some of this off, this is not normally known as a giant mover. I mean, you see in the back, the history here. This is set up to go to 63, possibly 67. So opportunities. Not saying anything's going to work. At TER breaking through the downtrend highs. It set up the 193 to 218 upside there. PLTS has 2 candles. Not going to do anything with that. QLGN looks like a freaking dumpster fire. Reverse split back here. Same pattern. When all the price action is below the roadmap line and then you see some big pop, that's danger. There's a whole group of day traders that do that. They pop stuff, hype it up, make money on the pop. Then there's a whole group of shorters that make money on the drop and just try to take money from people that aren't aware of what's happening. Potential topping out right there. Ooh. Tesla trying to break out. Nuggets. That's gold miners. 2x leverage on it. Be careful. Agri. Dumpster fire. Lots of reverse splits. Onto potentially trying to reverse the bottom here. I don't like the price action. We're just coming into the gap fill here. Got this big gap down. Trying to get through that. Then possibly we're going to meet up with this resistance at the right there at 618. So we may do this. If we do that, hold the roadmap line on a bounce, that would be a potential entry, maybe. I don't know. I'm not a big fan of this pattern here until we're above this level. I broke out of the downtrend, but none of this price section. So this lowest low here, arrow please. This lowest low right there is the only thing that really means anything. And there's not really any pullback. I'm a trend pullback continuation trader. I like to try to trade this piece right here without a pullback in here. That's not really anything to trade. Looking back at this, it doesn't really tell us anything because the IPO was back here in 2022 and it's just ground down since then. We don't know, did it start higher and we dropped into the IPO, or did it start lower and pop into the IPO? We don't know because we don't have the chart. It wasn't public. So that start point, that was corrective. 95% of stuff that's IPOs starts out in a corrective fashion and will make a lower low than the IPO. Even if they run higher off an IPO, it's still generally a corrective fashion. AEM hitting some ridiculous levels. Yeah, pushing it out. Looking back even bigger. Potential resistance up here at 206. At 200, 206, somewhere in there. Iron. I drew that fifth wave. Watch out. And we could pop it on up to 71, but be careful. The pullback probably wicked on that one. FDS, yikes. And that broke out of the box. Retracing deeply. I do keep it rocking. Let's check on K-Web. This is the way to play. I am long this with a call spread. I think I bought a 41, sold a 46 or 7 up here. For that pump. I was out to October. Got another month to go. BKKT. There's lots of stuff you can play China with. You can play the yin. You can play the yang. If you want to short it. The yin and the yang. Somebody's got a sense of humor, right? And there's China Web. Leverage. That one's probably going to cruise on up. Another ACS. Eat. And might drop on down in this 105 area. BKKT pushing back up into the roadmap line. Lower highs, higher lows. Don't really like it. DGNX. And nothing. Awesome, Kathy. Go ahead. I said oil is likely to drop. Like oil's going down, and then we'll probably kick off a hot war. Seth, you apparently glossed over what I said. And Newegg potentially bouncing. This is a potential roadmap line bounce. There's a high. Here's a low. Get above the 618, 168 on the upside. This did reverse split, so I'm not touching it. BMA. Looks garbage, pal. I mean, oil's been in a downtrend for 3 years, so it's just about time frame. I've been looking for a 50 touch for 2 years. PINC. It may have already topped out and come back. Nukes. 6850. ARB. Lower highs. Dumpster fire. Reverse split. GGAL. STX. X long on ASTS. BREA. Watch for that to come back down. Yeah, I mean, NKTR. It's funny that, we think we can put pressure on anybody with prices. We don't control the price of anything. How many billions of dollars in oil gets transacted a day? Yeah, this is what it makes me laugh about everything. Like, $103 million barrels of oil per day. Right? 103. That was last year. So 103 million barrels. You just put this in perspective. Like, if anybody's going to control the price, they have to be able to buy a considerable chunk of that, right? I've had articles on how you control the price of things. So people talk about gold being manipulated. There's not enough money to manipulate $22 trillion, $23 trillion. All right. 103.2 million. Literally burn that up in smoke every day. But we're talking about $60 price on oil. Right? Dipping in here, $62. And that's basically the futures price, get it out of the ground price, not the. So we're talking about $6.4 billion a day. $6.4 billion a day. And then that's every day. $6.4 billion every day. So how much of that oil supply do you have to control to move the price? Quite a bit, really. And then take that over the course of a year. Talking about $2.3 trillion worth of oil in a year. 2.3 trillion. We literally burn it. That's money we just pump out of the ground and burn. Right there. $2.3 trillion. So how much money does it take to manipulate that market? A lot. All right. It's not like we can just screw around with the price of oil and put pressure on Russia or put pressure on the Middle East or whatever. This is global humans here. You'd be like, well, the U.S. has that kind of money, but we're not gonna. How much money does it take day after day after day after day after day after day after day to mess with the price of oil? A lot. It takes a lot is the answer. And this, we're now at $25 trillion on gold. We're not just manipulating the price of, like, price manipulation is the biggest farce, you know. Nvidia's price is manipulated. Yeah, $4 trillion. It's 25. You can think about it this way. We already went through the price of oil and how much money transacts there. If this moves a dollar, that's $24 billion. $24.3 billion going in or out of the market. You know, it goes up, $24 billion flowing in. Goes down, $24 billion flowing out. So, how do you know gold's more finite? How much gold is in the world, really? We don't know. We keep revising the estimate. We don't know how finite it is. And then what do we use it for? We don't use it to generate energy. So it's kind of like, it's all an interesting, you know. What's the word? Just say in the ground. Approximately 1.6 trillion barrels of oil in the ground, proven reserves. There's probably a lot more than that unproven reserves. Seems to recycle itself somehow, some way. We don't really understand how. Wells we pump dry tend to recover after about 20 or 30 years. It's like how much gold is left in the ground. Yeah, 59,000 metric tons. That's a ton. Metric ton is 1,000 kilograms. So even if you went the light side of that, that's 54 million kilograms of gold. This won't be perfect, but that's that many ounces of gold. That's let's see, thousands, millions, 1.9 billion ounces of gold times $3,000 per ounce. That's just, you know, what we know. 1.9 billion times 3,000. I mean, I know it's 36, but I said 1.9 times 36. Yeah. So, like 6.8 trillion more gold. I bet there's more gold than that. Yeah. Coffee's interesting right now. Coffee, Arabica. This might go absolutely nuts because the Arabica crop is going to be has been permanently damaged, and it's going to take 30 years to recover. Yeah, go Google that story. And this KT might be blasting out. We could see coffee very expensive. Anyway, so looking at the setups for today, kind of skipping over some of the other things here. COHR, for those of you still hanging out, COHR fired off. Looking for 128. If you're like, hey, wait a minute, what about the statistics? What about those statistics? There you go. Not great on that one. Ever. This one fired off way back here. Still waiting to work out, and it's just been lower highs and higher lows. So it may pop up 31, but it may not. It may fail, pop down, dollar below the lows to stop. Here's the latest bounce. That would give us 27, which is inside. That one could work out, and the big ones still fail. Ugh. There's another one right here. Here's the high. Here's the low. Look for 11. I'm gonna be starting today. We have market masters every single day, so that kicks off at 11:30. Coming up in about an hour. Jack and I will be live talking about real trades and real things to do to make money in the markets. 23, 26. These are real trades too, but Jack tends to be a little more income focused. I just like to find opportunities. 37.78 on that one. Mass. We got the high, we got the low. 8.48. Low price stuff, be careful. SMR. Fired it off right there on Friday, and 58 targets. That could be a good one right there. You can sell puts on that one probably. TMDX. Here's the high, here's the low, kicking it off. 138 in there, and this was still active from back here, so stop dollar below low, and there you go. That's kind of what I got for today. As far as bias goes, probably still grinding higher. Watch out though, if S&P tags, if this shoots up into the 6,700 right here, right now, if we shoot off up into that 6,700, be careful. It's my warning. Be careful. That can time to start looking at booking off the froth. Basically, if you got some trade that's frothy, book off some profit, reduce your risk, pull it back down. Cash, smart place to sit right now at these crazy valuation levels. If we get a pullback, you can park it in. You can park it in stuff that still returns pretty good money. I mean, we got PAAA. Park it here. JAAA. Park it here. T-bill. Treasury's still grinding higher. Trying to remember. BIL, another one. You got lots of opportunities to park some money and still make fair return. You don't have to be in a crazy big trade. Just be careful out there. Have a great day, everybody. I'll be on Market Masters. So let me see if I can grab the link real quick. Throw it in the. Control C. We're gonna do this every day now. I guess Jack likes hanging out with me. Want to do it every day. There you go. That's what you can do. And we'll see you again soon. Bye for now, everybody.